Final accounts of a sole trader, Mr. T. Rafferty. In this question we are presented with a trial balance. Starting at the top of the question, we will read what we're asked to do. The following trial balance has been extracted from the accounts of Mr. T. Rafferty for the year ended 31st of December. You are required to prepare a trading and profit and loss account. So trading and profit and loss account for the year ended 31st of December and a balance sheet at that date. Now we're asked to prepare the trading and profit and loss account and the balance sheet from the trial balance and also from the additional piece of information given at the bottom. So to start, what I'll do is I'll go down to the trial balance and I'll identify where each item is going to go. If it's going to go into the trading account, I'll put little t beside it. If it's going to go into the profit and loss account, I'll put little p beside it. And if it's going to go into the balance sheet, I'll put little b beside it. So top of the question here, we have sales, trading account, purchases, trading account. All these items here are expenses. This is a heading here, and we have the rent down to wages and salaries. They're all expenses in the profit and loss account. Motor vehicles, premises, and furniture and equipment. They're all assets. They'll appear in the balance sheet. Debtors. These are the debtors here. So we will include those in the balance sheet as current assets. The bank overdraft is on the credit side. It goes into the balance sheet, but it'll be a current liability. And likewise, these creditors here, they will be current liabilities in the balance sheet. The drawings will go into the balance sheet as well, and in fact it'll be an adjustment against the capital. So the drawings we will link in with the capital when we look at the balance sheet. The loans, long-term loans, balance sheet, and capital goes into the balance sheet. Now it doesn't actually say here that the loans are long-term. We will just make an assumption now that it is in fact a long-term loan. Now that leaves us with this note at the bottom. This note at the bottom has to be included. Everything in the trial balance, all these items down here, have been included in this trial balance here using the double entry bookkeeping system. What we have to do now, if we're going to add something new in, we have to include it twice. So the stock, the 31st of December, the business had stock of unsold goods. So this is the closing stock worth 5,000. It'll go into the trading account and then it'll reappear as a current asset in the balance sheet. So now we'll start with our trading account and then we move into our profit and loss account. So just moving on to a clean page, I'm going to have my trading account and my profit and loss account. The trading account and the profit and loss account are quite often referred to as the income statement. So we'll start off then with the trading account part of the income statement. The trading account is made up of sales less the cost of sales. Now the sales figure is in the trial balance, but the cost of sales figure, there's no such thing in the trial balance, so we have to work out the cost of sales. The cost of sales is made up of the opening inventory, we'll add on the purchases, and we'll take away the closing inventory. And remember, inventory and stock are interchangeable. In fact, inventory would be the more modern term for stock. Now, when we work out the cost of sales, we take it away from the sales, and that would give us the gross profit. So what we need to do now is to go back to the trial balance and get the items we need. So if I just go back to the trial balance, I'm going to take the sales figure there. There it is. I'll take my purchases. Now there's no mention of any opening stock or opening inventory, so we'll assume that it's 0. And then here we have the closing stock or closing inventory at the end. So we need that as well. So back here, we'll pop in our figures. Now what I'll do is, I'll put the sales figure out here on the extreme right hand side. And then I will step in and I'll work out my cost of sales. And when I have it, I'll take it out to the right hand column here, line it up underneath the sales, take it away, and I'll get the gross profit figure. So just popping in the numbers, sales 110,000, opening inventory for stock, 0. Add on the purchases. So from the trial balance, we see the purchases come to 55,000. Take away the closing inventory or stock, which we see from the note is 5,000. And then we have the 55,000 minus the 5,000 gives us 50,000. Now I'll just remove these little circles here to make it a bit easier to read. And what we're saying here is that the cost of sales here, this figure here is the cost of sales, that is the cost of the goods that Mr. Rafferty sold. He sold the goods for 110,000, so he generated a profit of 60,000. So 60,000 is the gross profit, which is the profit Mr. Rafferty made on the buying and selling of goods. We will now move on to the profit and loss account part of the income statement. So what I'm going to have directly underneath my gross profit is less expenses. So I just write in here less expenses. Now if I go back to the trial balance, here we can see these items here. These represent the expenses, so I'm going from the rent down to the wage and salaries. So what I'm simply going to do is I'm going to transcribe these figures into my profit and loss account. So I'm just going to list them down here. So I write them in: the rent, the rates, advertising, light and heat, insurance, and the wage and salaries. Now what I'll do is I'll step into this column here. I will list all of those expenses. I will add them up, bring the total out, line it up underneath the gross profit figure, which is the 60,000, take it away, and I'll get my net profit figure right down here at the bottom. Now I'm just going to tidy this up a little bit, so I'll get rid of all that ink, and we just transcribe in the figures. So we can see from the trial balance, the rent is 7,000, the rates 2,000, advertising 3,000, light and heat 4,000, insurance 10,000, and wage and salaries 15,000. So if I add all those up, they come to 41,000. If I take that 41,000 away from the gross profit figure, which is here, of 60,000, I end up with a net profit figure of 19,000. So now we've completed the trading account and the profit and loss account. Or, to use a more modern term, we have completed the income statement. So we'll move on to the balance sheet. So if I turn over the page, I'm going to now do my balance sheet, which is also referred to as the statement of financial position. Now just note that the statement of financial position, or if you prefer balance sheet, is at a point in time. So it's as at or as on the 31st of December. And it is simply a listing. It's a listing of the assets, the capital, and the liabilities. So that's what we're going to do now. First thing we'll do is we'll list the assets. So I write in here total assets. Now I'm going to go back to my question, my trial balance, and I'm going to get the assets. So if I go back here, I can see I identified these here as assets. Now they are non-current assets. They are fixed assets, they're permanent, you buy them and you keep them in the business. We have the closing inventory down here, that will be a current asset, that appears in the balance sheet. We will have the debtors here. Now we're not going to list all the debtors, what we do is we're going to add them together and put in one figure, which we will call accounts receivable. And then we would have bank under normal circumstances, but in this case, there is a bank overdraft. So there's no bank figure. Well, what we'll do is we'll just put in bank as 0, and the bank overdraft will appear as a current liability. So, going back now to my balance sheet, I'm going to list my total assets under those two headings I just mentioned. So my non-current assets first, and they will be the premises, the furniture and equipment, and the motor vehicles. So I'll just put those in. And then I'll list my current assets, and generally speaking current assets will be the inventory, the closing inventory, the accounts receivable, which is the debtors, and bank. But in this case, as I've already mentioned, the bank will be 0. And that'll give us the total assets. So we just pop the numbers in. The premises, writing it over here, 250,000. The furniture and equipment, 40,000. And the motor vehicles are 25,000. So I'll add that up and get a total for my non-current assets of 315,000. Now I'll total up the current assets in here, and I'll bring the total out and line it up underneath the non-current assets. So if my current assets, my closing inventory, which remember is the note at the bottom of the trial balance, 5,000. The accounts receivable, the debtors, so if I add all those numbers together, I get 14,000, and the bank is 0. So those two added together come to 19,000, and if I add the 19,000 from my current assets to the total of my non-current assets, I get total assets of 334,000 even. So total assets must equal capital and liabilities. So the next part of my balance sheet is to draw up or make a list of my capital and my liabilities. So going on to the next page, I'll have capital and liabilities. And I'll start off with my capital. Now, it's a little capital account we have to do. So we'll have the opening capital, the change for the year, and the closing capital. The opening capital, the change for the year will be, well, net profit will enhance the capital, so we'll add that on. And then any money taken out by the owner, drawings, will reduce the capital. And that will give us the closing capital figure at the end of the year. Now let's just go and get the figures we need. So back to the trial balance. We have the capital figure, very last item there, 143,000. And here we can see the drawings, 9,000. So I need both of those figures. And then if I just go back to my income statement, I can see the net profit figure there of 19,000. That's the profit figure I'm going to add on. So back here then, I'll be having my opening capital plus the net profit less the drawings. So 143,000 opening capital, add on the net profit 19,000, take away the drawings, and that gives me a closing capital of 153,000. Now that's my capital done. I need to look at my liabilities. Now under liabilities I will have non-current liabilities, which will be long-term loans, and I'll have current liabilities, which will be shorter term debt. It'd have to be paid a little bit sooner. So if I just list them here, current liabilities, and they'll be things such as your creditors, and I'll group them together and I'll call them payables. So my accounts payable or creditors will be current. I'll have the bank overdraft, which will be current, and then I'll have the non-current liabilities, which is this long-term loan that we mentioned. Now when I put all those in and add everything up, I'll get a total down here at the bottom of capital and liabilities. So I'll start off by popping in the numbers here for my current liabilities. And what I do is I'll put them in here, add them up, and bring the total out so I can line it up underneath the total capital figure. So my payables, 18,000. Bank overdraft, 23,000. Add those two together, 41,000. The long-term loan, well, I'll just bring that straight out. There's only one item under that heading, so I'll put that out there, 140,000. So now I'll add up the capital, the current liabilities, and the long-term liabilities, and I get 334,000. So 334,000 is the total of capital plus liabilities. And I would just go and check my assets. Total assets, 334,000 is the total of my assets. And of course, as we just mentioned, that must equal to capital and liabilities. Okay, that is the question completed. Thank you very much.